The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the February 8th, the wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. And even more important than that, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial in at 877-927-6648. Now, if you have a question but you can't dial in, you can always send me an email. For that, send that to steve@tfnn.com. And inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got a sea of red out there. All the U.S. indices, all the sectors inside the S&P 500 are trading to the downside. The Dow off 115 points, about 0.3%. S&P about 0.8 or 32 points, 1 and 4 tenths for the NASDAQ 100, 180 points, about 1% for the Russell, 19 points to the downside. Semis off 37 points. You've got gold trading out at 1887. That's up $2. Silver trading up 17 cents at 22.35. Light sweet crude up 75 pennies. Trade out at 77.89. Natural gas back 9 cents in the 30-year Treasury, printing out 128.04. Leading the charge dollar-wise, the upside, you've got Inspire Medical Systems up $18, 7%. New Relic is up 21%, or about $14. Transdigim Group up $12, a little over 1.5%. Humana up $12, that's 2.5%. To the downside, Chipotle down 87 buckaroonies. Ooh, that's a stinker. That's down 5%. Paycom Software down 9%. That's 30 buckaroonies. Capri Holdings off 18 or 27%. Boy, we've got some shakers out there. Henry Jack and Associates up down 9% or $17. O'Reilly Automotive up 1.5%. That's 12 points to the downside. So we've got some movers and we've got some shakers. Of course, I want to look at what you want to look at. Let's do this here. Let's start with actually the cash indices. So we're going to change our screens out here. We're just going to get a feel for what the cash indice charts are communicating to you and I as of 11:09 in the morning on February the 8th. And we start by taking a look at the Dow Jones Industrials, which has a confirmed Rhodes Momentum Indicator top. So there's your resistance level. It's the high of that candle from December 13th. That level is up at the 34,712 area. Price right now is above its green oscillator and change line. This is the daily time frame. As long as price remains above that, those would be a bullish condition and suggest a run back towards this little bear sash candle top that formed out here on January 13th, up around the 34,342 level. Now, if price closes below that, it just suggests a further retracement is likely, mostly that it's lost its momentum. What has not lost its momentum is the S&P 500. It formed a TD9 count top, and since then, prices pulled back and tested and rejected its green oscillator and change line. Those are bullish conditions. However, the TD9 count top is still in place, and price must close above that in order to negate that pattern. The signal, the overall signal here, is neutral, but a close above 41.95.44, that would then negate the pattern and suggest a strong move to the upside. Right now, support is at 40.79. This is on the S&P cash index out there. The NDX 100, similar to the S&P, forms a TD9 count top. Price has not even made its way back to its green oscillator and change line, but it's above that, and therefore it is in a neutral position. So you've got neutral for the S&P, neutral for the NDX 100. For the Russell 2000, you also have a neutral position, but today, right now, it's testing its green oscillator and change line at 1954. So a close below that would suggest that the Russell would be getting ready to pull back further, could even be targeting its breakout level of 1859. But right now, it's got a neutral signal, TD9 count top. The semis are trading lower today. They have a sell the D point pattern. That confirmed out here with this little shooting star candle from 1, 2, 3, 4 trading sessions ago. So that would have been last week, Thursday or Friday out here. Now, price here is also above. It's tested and rejected for the last 2 trading sessions at the green oscillator and change line. So same kind of signal here. The signal is neutral. The Dow Transports, they have an A to B equals CD pattern on the upside, but they have not generated a bearish reversal candle. So they do not have a top. The NASDAQ Composite, has a TD9 count top, but much like the NDX 100, still trading well above, has not even tested its green oscillator and change line. And the New York Stock Exchange, its top was made with a wave number 7 pattern. A very small portion of the Chapman wave, worth understanding out there. Price is below its green oscillator and change line, so that's suggesting that it could retrace further. So overall, what do we have out here? We've got a lot of topping signals that are all really neutral because price is not taking out any key levels of support out there. That is the message of the cash indice charts out there. My apology for the throat. I hear it cracking quite a bit. My apology also for not being there yesterday. I had an allergic or a adverse reaction to a medical injection, and it was terrible. When I say terrible, it was a recreation for those of you that like the Wedding Crashers movie. Just think about that Bradley Cooper scene in there. And that's what I was recreating over about the last 24 hours. But got to get back up and at them. So let's go. So that's what the cash indice charts are doing. Let's move over and take a look at, let's go take a look at the NQ. That's what's up on our screen right now. So that makes it easy for us to take a look at what we're going to look at here. Now, the NQ's got the same kind of signals that we looked at in the NDX 100 and the NASDAQ Composite. It's got a TD9 count top. But here, we have price above the top of its profile out there and above its green oscillator and change line. So it's a 12,408 area that would be support on any kind of a pullback out there, but its overall signal is neutral. If we take a look at a 5-hour time frame chart out here to see what we've got, if anything, all we have is price consolidating with inside its profile. Now, there's a new profile that's formed out here. It's bullish in structure. You've got support down at 12,495 to 12,531. Excuse me. And you've got resistance up to the 12,782 area. We've got a similar set of circumstances inside the 240-minute chart. Price consolidating with inside that profile as well. It too forming a new profile right now. 12,495 is support. 12,818 is resistance. You've got a TD9 count bottom that formed yesterday at 8 o'clock in the morning on the 2-hour time frame chart. So if that low gets taken out, 12,457, that would then be signaling a further move lower. If we look at the 60-minute time frame chart out here, we are in the bar following bar number 9. That suggests that it's 11:14 right now. That suggests that by 12 noon, the NQ should form a bottom. And that bottom should then take price up to its oscillator and change line area, right now printing at 12,726. And that is its signal. Now, whatever the low is of this hourly session, and it may not be in just yet, but whatever that low is, if price starts trading below that, more importantly, closes below that, then that's going to tell us about a strong momentum move to the downside. So for the time being, or for right now, let's see, let me update this 30-minute chart. We are now in wave number 8 to the downside. So you've got a 60-minute bar following bar number 9. On the 30-minute chart, we got the next candle is going to be bar number 8 at 11:30. So you can get in bottom signals here on the 60 and the 30-minute chart that should lead to a bounce up towards that 12,725, 12,704 area. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Let's go out to our first caller. It's John in Philly. John, thanks for calling. Thanks for holding. How are you doing today?
Steve, I'm doing very well, and
excellent.
In the event that you're facing a little difficulty here, please say so right out
doing
loud,
good.
And we won't press
well.
it.
Yeah, thank you. So I want to take a look at high-grade copper out there, trading out right now at about $4.04. Tell us what you're doing and how I can best help you.
I had bought copper a couple of days ago, about 401.
Okay.
The background is I had been holding a core long position up until it was, I think the date was a week ago Monday, whatever that date was. I guess that was the 30th. And I actually spoke to Tom O'Brien on his show.
Okay.
And asked the question, if we break the floor that had developed at that time at about 417,
right?
Where do we head? And Tom, what do you think the odds of that happening? And he said, well, I think the odds are high we break it, and then we target, I recall his idea was we target the prior highs was like 394.
Right.
And there were a series of highs right at that level last fall. So 417 got busted. There was a quick waterfall decline, and we got down to 399. So we got close to that nest of prior highs, close, but not quite a cigar.
Sure.
And the reason for my calling, Steve, is to ask you on your work specifically focused upon the daily charts, nothing else. Is there anything that points, that signals to you a potential bottom or likelihood extended decline?
Excellent question. So you want to focus on just the daily chart. We'll do it with 2 different charts. The first thing that I'll do, John, is pull over to the black background chart, which is going to be pretty clear. It's going to show you the new profile that formed yesterday. It's bullish in structure. So in addition to price potentially targeting those previous highs in the 394 area, you now have a new bullish structured profile. That has support at 402. So when John, when you called into Tom's show, he wouldn't have had that new profile information. He had old profile information. So here we know that there's support, John, at 402. The center happens to be much closer to the bottom than to the top of the profile. The top is at 425, and the center's at 408. What we can see right now is the last two trading sessions, price has struggled at the 408 area. If price closes above that, the way that it typically works with these bullish structure profiles is if price can close above it, it increases the odds of price making its way up to 425. Doesn't tell us whether it's a strong bottom or not, just that you've got a bullish structure daily profile and you've got support. If you're still holding on to that core long position, I can't recall what you did with that. You'd probably stick with it right now, knowing that you've got support at your back. So that's on this daily chart. Any questions about this daily chart before I move over to the white background chart?
Thank you. So far, so good.
Perfect. So now we go take a look at the white background chart up here, and this will come up just momentarily, folks, and I'll expand out the chart. What we do know is that this formed a TD9 count top. It does it on bar number 8, similar to the last time that it formed that same top. So it formed a TD9 count top right on November the 14th. This is really right around the exact same area that John was targeting, John or Tom was targeting. That's at 394. So it was a TD9 count top, led to a retracement. Now, on the trading day of January the 18th, forms another TD9 count top. Now, we'll see that there's a bar number 9 is likely to complete today, but so far the low of the pattern, John, is bar number 7. Ideally, for this to be a solid bottom on a daily time frame, we would see some type of spike below bar number 7. The low of that bar is 399. It doesn't need to close below it, but it just needs a spike below it to then generate that signal for a confirmed TD9 count bottom. Now, that could take place today or it could take place tomorrow. I would feel more comfortable if we got that, then being able to say to you, based upon the daily charts, and what you'd like to see is you'd like to see price close back above the bottom of that profile at 402. So we're looking for a big flush to the downside, then a move back above the profile level. Then I would say, or I could say to you, we've got signals of a confirmed bottom, and price should go back and revisit the TD9 count top, or maybe even about the 445 area. John, any questions about these charts?
No, all the picture that I need, so thank you.
Oh, perfect. Okay. So we've taken care of high-grade copper. I believe you wanted to also look at Goldilocks. Is that correct?
I did, and I wanted to preface my question to you with just a couple observations. First, the COMEX gold rally was almost exactly 3 months long. So November 3rd, 1618 low, to February 2nd, 1961 on the Feb contract, 1975 on that April contract. And then, of course, we had that 2-day waterfall smash.
Yes.
Steve, you and I are students of this gold market, and we examined the commitment of traders data. And what we've observed over the great many years is that when the speculator group gets excessively long, COMEX futures are subject to brief, harsh, abrupt waterfall setbacks as speculators who bought the highs get flushed, take their losses, lick their wounds. So that is what we had, of course, Thursday and Friday. It was $100 high to low, as we all know.
Yes.
Just following up from that, 2 points of great interest to me. One, last weekend was a full moon. The low was Sunday night at 6 p.m. upon the Globex Open, 1873. Bullseye on the lunar cycle, and at least short-term low. Parenthetically, your discovery back almost 10 years ago now, the apogee-perigee pivots, an apogee pivot was generated upon the Globex Open Sunday.
Yes.
And I figured the number at about 1878. Bottom line, Steve, that 1873 Sunday opening low and that 1878 apogee pivot level have acted since Sunday 6 p.m. as a low point. The market's not yet busted through. Of course, only in the fullness of time will we see whether or not that's super important or not. But I did have to share that with you because as a short-term scalp trader, that's just powerful risk control information.
Well, let me give you something else, and it just is attempting to form as we speak right now, and that's a new profile. So we're looking at the white background charts, folks, and I don't have that advanced detection tool on this white background software, my Ninja Trader software. I'm not going to change screens right here, John. Just give this number to you to put down on a pad of paper. So to go along with your observation of the full moon, of the apogee pivot point, you now have a new profile. It is a strong bottom profile. What I mean by it, well, let me just change over to the screen. Hold on a minute here. So that this way everybody can see it. And everybody's used to seeing 3 lines for profiles. I'm just going to expand out the daily time frame chart out here. But every now and then, support ends up being, or the bottom of the profile ends up also being where the center is at. That's at 1883.40. That is a very strong level of support out there that I would say, if broken, if closed below, suggests lower price. Otherwise, we should see a move up towards that 1914 level, the top of that daily profile. I hope that helps you out, John.
Thanks so much, Steve.
You bet. Have a wonderful day. That was John in Philly. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow down 191, S&P's up 45, NASDAQ 100, 239 to the downside. Let's get to some of the questions that have come in. The first one coming in from Alan. And Alan is, this one's from an email. Shoot. Sorry about that. Give me 1 second here. Okay. So Alan writes in and he says, hope all is well with you. Thanks. When you get a chance, please do a daily, weekly, and monthly analysis of Valley, VALE is a ticker symbol. You're long at 16. Would like to add to the position with a good risk-reward entry point. So we got the charts up on our screen. Let me make sure I've got the charts up. Yeah. And as we take a look at the daily time frame chart, what we know out here is I can see a number of A to B equals CD pattern. So it did have a sell the D point pattern that confirmed on January 27th. Price is below the bottom of its daily profile. No bottoming pattern or signal here just yet. And then that would suggest that price might be targeting 1655. So Alan, you're going to form bar number 8 today. This could form a TD9 count bottom. And if it does, then that would be your trigger to add to your position. Now, just like John and I took a look at for, I think it was copper, is that we still need to see at least a pinch below the low of the current pattern, which is bar number 6. So you need to see a spike below 1665. That needs to occur. Today's Wednesday, today, tomorrow, or Friday. If that occurs, and you'd really love price to hold 1655, that would be one potential trigger or signal. I said that'd be one potential trigger or signal. What if we don't get that? Well, 1665 still becomes a number to look at, and I would have to say it's be between 1620 and 1655. 1620 happens to be the bottom of the weekly profile. The bottom of and with price below its green oscillator and change line, and having a sell the D point pattern, price could be targeting that level. So your entry area or zone right now, I'd have to say, would be between 1620 and 1655. I don't see anything on the monthly chart to really assist us, so I hope that helps you out. Now, if we take a quick peek here of the consecutive closings, higher or lower, we can see that right now we are in day number 5 of a move lower. So that's a pretty conservative move. We haven't seen 5 consecutive days lower since the bottom that formed on September the 1st. I'm not saying that that's going to form the bottom. I'm just saying it's unusual for this to do more than a 5-day move to the downside. So that's suggesting that we could or should see a bounce here soon. But let's go with the current charts on the daily and the weekly, and they suggest now is not the time to enter or add to your position, but instead look to see what transpires around 1620, 1655. So Alan, thanks so much for writing in. I hope that helps you out, and have a terrific day. Next question coming in from John. And John, I believe this was inside the Tigers Den, wanted to take a look at Apple. And Apple, very much like the NQ or the NASDAQ 100, John, this also has a TD9 count top. The pattern is very similar to the NQ and the NDX 100. Really, the NQ price is above the top of its profile. That's at 145.88, and it's above its green oscillator and change line. So unfortunately, or fortunately, the overall signal here for Apple in the daily time frame is neutral. If we look at the weekly time frame, it's not neutral. It's bullish. It's bullish because price got down, tested in essence its descending trend line bottom, does it with a hammer candle, and now with price above its profiles, it should target its descending trend line. That's in about the 167-ish area out there. And with price trade above the center of its bullish structured monthly profile, don't know where it will close at the end of the month, but if it does close above 149.91, signals that its intent to move to 162.55. That's what I see when I take a look at the daily, weekly, and monthly charts for Apple. If we look at a 30-minute time frame, just to get a feel for this move lower in the markets out here, we're not seeing anything major inside of Apple on a 30-minute time frame, although right now it is testing the bottom of that profile, which held during that last at 11:30, and that profile level is at 152.91. So that's an area to watch as we come to the noon time frame. Remember, on the NQ charts, both on the 30 and the 60, we are likely to get a TD9 count bottom pattern. Let me see if that's what I still have up on our charts up here. Yes, it is. So you can see that you're still moving lower on the 60-minute chart. We're still in the bar following bar number 9. On the 30-minute chart, where we're at is this has already formed bar number 8. So it's telling us we're going to, or we should get a 90% chance of getting a TD9 count bottom. The question is, does it come on bar number 9 or the bar following bar number 9? But what these short-term time frame charts for the NQ are suggesting is that we should see some type of at least a bounce. Well, if you go back, we take a look at the Apple charts out here. In essence, on that 30-minute chart, that's what it was really signaling to you and I as well. It's not a guarantee, but it's pretty darn good out there with regard to the way that Apple is behaving as we speak at 11:35 in the morning. So I hope that helps you out, John, with the information you're looking for. If not, just feel free to ping me back, and I'll get you that information. The next question coming in from Electric Light Orchestra inside our Tigers Den. ELO would like to take a look at N-phase, ENPH. Now, N-phase forms a pretty nice Rhodes Momentum Indicator bottom pattern out here. Price is struggling with the top of its profile. Let me just simply expand out this chart. Yes, price traded above it, but it was never able to hold it. And that's a bearish structured daily profile. And your resistance level out here is at 230.22. We can see we've had a couple of days where price has gotten above it, but it's at least at this stage here today, it's not holding that level as well. So what do we have out here to pay attention to? 230.22. That's the key number. ELO. If price closes above that, then what could be taking place? Well, you could get a number of different patterns. Let's not go into what you could get. Right now, your focus would be on 230.22 out there. If price closes above it, should be moving to the upside. Now, the weekly time frame chart, wave number 7, Rhodes momentum indicator signal out here, confirm pattern, and we don't. Even though it's got the potential to form a TD9 count, bottom still needs to spike below bar number 7 out here. So end phase energy would need to spike below 201.68 to possibly trigger a weekly TD9 count bottom. Price is trading below its monthly profile level, having the Rhodes momentum indicator top. That's suggesting lower price. So I'm going to go with at least they pull back to 212.84. That's red oscillator and change line on the daily time frame. So ELO, I hope that helps you out as well. If you've got any other questions, let me know, and I'll be happy to get to those charts as well. The next question coming in from Hector and Patty. And Hector and Patty want to take a look at INSP. And Hector's question is it possible that the weekly chart is generating an A to B equals CD to the upside? So the answer is it's Wednesday at 11:37, and I don't know, because it really all is dependent upon the close on Friday. But if price does close above 262.54, then I would say the answer is yes. Now, let's go take a look at the black background chart. It's going to be a little bit easier for, what am I going to do here? We're in the wrong spot. It's going to be easier to take a look at the A to B equals CD patterns out there. So let's do that. Let's go over to our 3 time frame charts. Let's put in ENPH, dead phase energy, INSP. Sorry about that little brain fart there. So let's go to Inspire Medical Solutions out here. What's Inspire showing us? So with the A to B equals CD pattern, now the weekly already maybe has one in place out here. So you were looking at this one. So first let's take a look at this. Let me see what the retracement was. So the real A to B equals CD pattern, or one of them, is this one with the low being on May 9th. The high, that's the A point. The B point being on August 8th. The C point, and the C point being a retracement into that bullish structured profile on 1010, and 81%. So I'm not going to call that an A to B equals CD pattern. You can, but once it gets beyond 0.786, somewhat questionable. So the A to B equals CD pattern that Hector and Patty are asking about is this one. We'll draw it in here momentarily. The A point is really going to, well, I tell you what he's probably using. They're going to use the low from 1010. They're going to use the high out here that had volume on December 19th of 1.2 million shares, and the C point down here on January 9th. Now, that's only a 24% retracement, and I want to see a 0.382 retracement. So Hector and Patty, I'm saying no, we can't really call that an A to B equals CD to the upside either, but we'll finish looking at Inspire Medical as soon as we get back from this break.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we're taking a look at ticker symbol INSP. This is for Hector and Patty. And they were asking about the A to B equals CD pattern. I'm sorry, I'm really trying to multitask here. Probably shouldn't, but I am anyways. So we were talking about the A to B equals CD pattern. We sort of negated that there's a technical A to B equals CD pattern because of the lack of retracement, or one because of too much retracement, and the other because of a lack of retracement. So those are just simply Stevie's rules out there. If we take a look at the other patterns, so when I'm struggling, Hector and Patty, and you guys know this, when I struggle, for example, I take a look at a daily chart and I'm struggling with where's the A to B equals CD pattern to the upside or downside if there is one, I go up to the next time frame. Usually it sorts it out, just simply it eliminates some of the noise. And then when I have trouble on the weekly, I go up to the monthly. Well, when I go to the monthly time frame chart here, what I see is a real solid consolidation pattern that price is in. And you can see the yellow rectangular box. Now, we're early into the month and have no idea whether the price is going to be able to break above. What we do know is last month, the swing point, which was November 1st, that had volume of 4.3 million shares. Last month, you moved in that swing point with 4.8. The month before was 5.9. When you move into a swing point with volume, you usually go test the top. So, Hector and Patty, I would say that the monthly chart is suggesting at least a test of the 286.29 level. Well, here's the interesting thing about that. That's the top of the swing point. When I look at the daily time frame chart, and I'm not trying to fit anything, I just was drawing the patterns and then see what the results are. So I drew on a daily chart. It was a clear consolidation pattern. Again, that lower yellow rectangle area. And when you break through a consolidation to the upside or the downside, it generates a measured move signal. The measured move says that price should make a move equal to or greater than the original consolidation. So in this case here, we can see that price is with volume trading above a swing point from just a few days ago, February 2nd, 309,000 shares. You've already done 343,000 shares. So you're above that swing point. Can't draw an A to B equals CD in here, but if we take a look at the consolidation breakout, it takes us up to about the 286.96 level. What was the high of that session out there, that swing point that is trading into? 286.29. I did not make this stuff up. I just simply put the patterns in and then see what the results are. So I would say, Hector and Patty, that Inspire, the way to look at where that's headed to is to the top of that swing point. Now, if it can close above that swing point, well, then it should go ahead and finish off this consolidation, and that would take you up into another $100 higher into the 388-ish type area or so. So that's what I see when I take a look at the charts for Inspire Systems. I hope that that inspires you as well. Let's take a look at our next question that's coming in. It's from Dennis from West Palm Beach. He wants to take a look at Microsoft. So let's turn over to those charts here. Give me a moment. I'm going to change over to the white background screens. And now we've got Microsoft. And I apologize, Dennis. You're so far high up in the list here, I can't really figure out where it's at, your question. So I'm just going to analyze the chart. And in the case of Microsoft negated a TD9 count top yesterday. That TD9 count top lasted for 2 trading sessions. That tells us about a strong upward momentum move inside of Microsoft. So this does have clear A to B equals CD patterns out there. Now, today price not trading above yesterday's high. But it did trade above it. Now we do have a B, C, D, E, F. I'm going to go with the black, not the red signal out there. So we got an A to B equals C to the upside. So if a bearish reversal candle did form, Dennis, it would generate a sell the D point pattern. The weekly chart, we're trading above last week's high. That's a bullish signal. That suggests to move up towards the 293.30 level, the TD9 count breakdown area. Monthly's got a TD9 count bottom. Price should go target the 282-ish area. You're trading above the bottom of that profile, so it should go target that green oscillator and change line. So let's go back and take a look at, what do we want to take a look at? Well, let's look at a 30-minute chart here before I go switch over to the black background charts to draw on the A to B equals CD patterns out here. We have a nothing. We have a gap to the upside this morning. Price right now pulling back. You just close that gap. But you are trading on a 30-minute basis below the bottom of the profile and its oscillator and change line. If that condition remains, you could see a further move back even to the 256.06 level out there. I'm not calling that just yet. I would say price would be pulling back into the swing point from about 1:30 in the afternoon yesterday. That's between the 267 to 263 range out there. So that's a 30-minute time frame chart for Microsoft. Now let's go take a look at that negated TD9 count top that now has turned into another, well, extended the A to B equals CD pattern. So to do that, we'll switch back to those black background screens. We'll get over to my little tab that does that. We'll pull up Microsoft, and then we'll go take a look at that daily time frame chart. We'll just simply expand. Well, there's a couple different A to B equals CD patterns out here. There's the one that's already shown. It's already hit the 1 to 2 price projection level. As Tom O'Brien has taught us in the art of timing the trades, usually you get to a 1 to 2 level. This is the daily time frame we're looking at. The market will do something different. I say, because it's an A to B equals CD pattern, and you've negated a topping pattern, the TD9 count that took place right out here on the trading day of February the 2nd, you need a bearish reversal candle to confirm a top. Otherwise, price might want to make that move to the 2.618 level out there. Now, I don't know about this larger A to B equals CD, if it's valid or not. When I say valid, I mean, what was the retracement of that B to C leg out there? It's starting to look to me like it's more than a 0.786, and it was an 88%. So I'm not going to call that the active A to B equals CD pattern. Let's look at the weekly chart. So the weekly chart, let's open this up. And on the weekly chart, let's get rid of that A to B equals CD to the downside. Let's look at the one to the upside. So do I get that same pattern? I think I might, but let me just make sure. So I got the A point. I got the A point right here. That's at the lows from October 31st. High up here on December 12th. And then a pull back into January 2nd. Yeah, that's that same 88% retracement. So I'd have to say that what I'm going to do is I fall back to the swing points. So the swing point out here, price has not gotten up to it. And that's a trading week of August the 15th. Volume there, about 92 million shares. You're already at 103 million shares. You're pushing higher with volume. Looks to me like that is really the target area. And that's from between 285 to 294. So that's what I see, Dennis, when I take a look at the Apple charts out there. However, let's go one step further. That's on that monthly time frame. And on the monthly time frame, you're trading into a bearish structured profile. So you've got some turbulence between 280 and 299. So, Dennis, I hope that helps you out. Thanks so much for the request. I overlooked the request. My apology. That was from Duncan Steve. Want to take a look at Bank of America. So thank you for reposting that for me. Much appreciated. So we'll get those charts up on the screen. And your question was Bank of America, if time. Okay, anything specific about Bank of America? I'll begin looking at it. I'm going to switch over to those white background charts here. So give me a moment to do that. We'll pull that up on our screen. What we'll see here on Microsoft is that on Bank of America is it too has a TD9 count top. Was it negated yesterday? Well, the high of the TD9 count top pattern was 36.76. Yesterday's close, 36.77. It has negated that signal. That talks to us about a strong upward momentum move for Bank of America. Where is its next target? Well, when I look at the weekly chart, next target is 38.60. When I look at the monthly chart, It's around 37.85. That becomes your next upside target range for Microsoft. Let's go back to the black background charts. Let's go take a look at any A to B equals CD patterns, if there are any that show up. It's just going to be easier for me to do that. So I'll do that while we're going to this breakout here. I'll see if there's any other questions. We might have a pretty quick round out there if there are. But with regard to Bank of America, here's the A to B equals CD pattern, just so I can give you the next price projection level out here. The next price projection level to the upside is going to be 38.03. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Dow's down 211, S&P's off 44, NASDAQ 100, 220. Don't forget, at about 12 noon, we should get TD9 count bottoms in both the hourly and the 30-minute time frame chart. So expect and anticipate at least some type of relief. What that leads to, time will tell. Let's get to the last two questions. The first one coming in here from Tim M. And Tim wants to take a look at Titan Machinery, looking for a long entry when one presents itself in the daily or the weekly. So on the daily out here, Titan Energy has a Rhodes Momentum indicator top and a TD9 count top. And price right now is trading below 43.08. Well, the bottom of it's not. The bottom of its profile is 43.08. If price closes below that, Tim, that's suggesting lower price. The lower price would be 40.28. So right now, I'll suggest price held support, close below that, and I would be waiting at this stage here more for the 40.28 level than to say now is the time, 43.08. The weekly chart And the reason for you to really look for a long position is because it negated last week. It negated a TD9 count top. Now, this week it could actually form the Rhodes Momentum Indicator top out there. So, again, it says, be caution. You're not in this trade. The monthly looks okay. I don't see a confirmed top or anything along those lines out there. So, on a daily basis, price has pulled back to test support. But if it closes below that level out there, 40.28 or 39.15 are more likely the places for you to add to that position or get into a position, I should say. Nicholas writes in, and he wants to take a look at Tesla. So let's go take a look at the stocks for Tesla, see what it's doing here. So Tesla forms a TD9 count top. It does that on February 3rd, 4 trading sessions ago. The high of that pattern is 199, even Steven. We're at 198 and change right now. At close above that negates that pattern, and that would suggest a move up to the next TD9 count breakdown level at 227.87. However, not so fast. And that was Basil Chapman saying not so fast. And the reason is because he sees wave number 7. That's letter G. Now, you need a lower high. That means you couldn't confirm wave number 7 top until tomorrow out there. But we do have a top that's in place. So even if you get the TD9 count top that gets negated, you still have to be on guard for that potential of that wave number 7 top. The weekly chart looks really good. It says it over time. Tesla wants to get back to 313. The monthly chart says, hold on a minute. I've got a battle at 205, 228, and then around the 258-ish area. So hope that helps everybody out. Thanks so much for tuning in. You don't see the chart. My apology. I'll put the Tesla chart up on my screen here for everybody inside the Tiger's Den. Have a wonderful Wednesday, folks, and I'll see you tomorrow on Terrific Thursday.